Well, what a first month to the year it's been. We've seen record highs for a number of the US markets. We've seen the dollar index drop around 4%. Joining us now to talk us through some of these charts is Bryan Noble, tradernoble.com. Thanks very much for joining us once again. Let's start with what we've seen in terms of the dollar, because that's really been a big driver of a lot of the markets.
Yeah, it's amazing. If you go back to the beginning of January, all the research coming out across most people's desks was dollar bullish, and despite the backup in 10-year bond yields to 250, the dollar has fallen 4%, and it's significant. The first trading day of the year, on January the 3rd, the dollar made a high index at 103.80, closed that week below 102.40 to give a key week reversal, and then the following week we followed through with a key day reversal. So the dollar really needs to get back above 102.40 to 102.50 to stabilise. Otherwise, if we look at the monthly chart and we close below 99.50 next Tuesday, I know it's away from here, then we'll have a key monthly reversal, which is very, very rare.
So what are then the key levels on the new charts I'm going to show you? We're going to split the charts here. It's one of the things you can do on the new IG platform. So we've got daily on one side, monthly on the other there. What are the key levels then you're going to be watching for the end of the month? Tell us about what we're going to see in the beginning of February.
Well, on the plus side, if we can break back above 102.45, it will negate the key week reversal that we've had. On the downside, if we break 99.50, it will be a key month reversal, which will be very bearish, and then that opens up a possibility of move down to 95. It's interesting, the euro, which also bottomed on the 3rd of January at 103.41, as long as we hold above that level, then I think the euro is going to go back up to 110, 112. If you remember, we were talking here last month at the beginning of December after Draghi's last press conference, everybody was bearish the euro, but I mean, the German inflation has picked up. The Bundesbank clearly don't want this euro to fall anymore, and they're looking for a higher euro, and I think that's going to be the trade of 17, is people, the year of surprises. With Trump getting in, we've already had so many surprises already, and I think it's going to continue.
So with euro, you say that this is the trade people are looking for here. How long do you think this trade's got to run?
Well, as long as we stay over 103.40, I'm bullish the euro, and I think the euro can get back up to 110, 112. The fair value for the euro is probably around 125. Like, what people forget, we've had a massive move. We've come from 160 down to that low of 103.40. It's been an incredible 2.5-year move, and historically, when you get the two main currencies, you don't have such a huge move against each other. And okay, we may test par. If we break 103.40, yes, we probably will test par. But I think even from there, the downside is limited. And also, when you have a strong dollar, you get all the crisis back in the emerging markets. Just look at the Mexican peso, what's happened with that currency. It's just been destroyed over the last 18 months.
I mean, it is so much a dollar story, but there is so much actually going on, obviously, when we look at cable, even when we look at euro, happening in these economies as well, that is playing its part in what we're seeing in this market.
Yeah, well, the cable has had a huge rally off the 119.60 low that we had last Monday week, following the Brexit, or the hard Brexit. So the cable has certainly put in a huge bottom. I think as long as cable can stay over 124, then we should be able to push back up to 128, 129. But for really, cable needs to get back above 134 to get sterling on a strong footing. But it's one currency I would not be short. Euro sterling's had a huge move, 88.50 last Monday week to 84 handle today. Certainly would not be short sterling. And I think at the end of the day, Brexit, you've seen with the FTSE's made multi-year highs, new all-time highs over the last 6 weeks, on top of the big move we've had since June, and a weak sterling has driven that. So I think the UK is fine.
Talking of record highs, let's turn our attention to the US markets. Of course, we saw the Dow head over 20,000, but it wasn't just the Dow that's hitting new highs. We had the S&P as well.
Yeah, and the Nasdaq, and it's been an incredible move. Like the Dow is up 9.5% since Trump got elected. It was the second quickest move in history from 19,000.
2 sessions, I think it's.
Yeah, 19,000 to 20,000 is incredible. Even though it took 5 attempts to finally break 20,000, which we've done. I think the valuations are getting very stretched. My long-term target on the S&P was 2300 to 2334. We just dropped shy there on Thursday. I think, for putting on a more macro position, and I have not been bearish the stock market at all. I know we need a set extreme to confirm that this market is heading lower, but we saw with the GDP numbers today, very weak at 1.9%. And we've heard all this talk from Trump, but we haven't seen anything yet. So there's an awful lot priced in here, and I think if we can get the S&P up to 2310 to 2330, it might be worth trying a more macro macro position. Short-term traders, we have a gap from last Wednesday to Thursday of 22.77 to 22.84. S&P is probably a short-term buy if we go back and test that level for a move back up to the 2300.
I mean, the S&P is such an interesting one. As you can see there on your screen, we've traded in this really narrow range for the last 2 months, haven't we?
It's been incredible after the huge move higher. Really to get bearish the S&P, you need to break the 30 December low at 22.75 and 3/4 in the futures contract. The Dow did break its equivalent low, but didn't have follow through in the S&P, so we had positive divergence. Finally, we got the move higher with the gap up on Wednesday, and the S&P is against with very narrow, only 9-handle range trading yesterday, and even today's been very quiet despite the weaker GDP.
A lot of people would see this though, as you said, we had such a rally up, and then having had this trading range, really creating such a, I suppose, a base, a consolidated base for the next level up to a certain extent.
Definitely, but that's why I think this 23.30 area is my ultimate target that I've had in the S&P. I don't really have a target beyond then, so I mean I have not been short, but I'm certainly looking to get more macro. The Dow equivalent will be somewhere between 20,350 to 20,500. We have to, the GDP numbers is definitely going to hurt people today, and we've seen it even with the euro, which is trading at 106.60 ahead of the numbers, now back up to 107.20. And if the euro can break the double top that we had during the week of 107.75, then we're going to go up to this 108.5 and possibly up to 110.
Okay, so that's it, euro dollar there for you on your screen. Also playing into what we're seeing in the market, well, what we've seen from the dollar has played into what we've seen in terms of gold at the moment. I mean, this week, what a drop back, having had such a rally since the beginning of the year. Yeah,
it's amazing. The best technical signal for gold is the daily sentiment index. We spoke about this in December. Gold was trading in the 1120s. The DSI was trading at 6%. It just wasn't sustainable. I know it stayed in single digits for probably 2 weeks. Gold dropped at that stage from 1140 down to the ultimate low that day of 1123, and then boom, we rally $100 up to 1220. But even looking at the DSI, it's not overbought. I think as long as the gold can hold 1170, 1180, we'll probably go back up and test 1220, and I still fancy us to break 1220 up to my next target of 1270.
And what sort of time period though would you be looking for that move, considering the pace at which we've seen the last couple of moves?
Yeah, I think over the next few weeks, it's all a dollar story. If the dollar continues to weaken, then gold is going to push higher. As long as gold can hold over 1123, if you look gold and silver, they've had massive moves. They come from 1900. We got a low of 1046 last year in gold, so gold is, it's stabilised. Silver hit a high of $51 in May 2011. That's gone down to a low of 1460, and I think silver is very cheap. It's trading around 1670 today, and that's off a high of 1740 last week, so it's had a quick move down. Was up 8% for the year. I think as long as silver can hold 1640, then I think we'll push back up to 1740 and on up to $18.
Just on gold, it's interesting in terms of the moving averages. You can see those on the screen. That green line is the 20-day moving average. So we're now below the 20-day moving average on this one. What does that? Is that playing to what you're thinking in regards to where we're going? Yeah,
well, as long as we can hold this 1170, 1180 area, gold tested 1180 this morning. It's bounced a bit on the back of the weaker GDP numbers. So I want to see where we close this evening. Obviously, a $40 sell-off is quite a lot from last week, but bearing in mind it's only given back, off the $100 rally, it's only given back $40 so far. If gold breaks below 1170, then there's a chance we go back down to 1140 again.
Okay, got to leave it there, but thank you very much, Bryan Noble there, founder of traderandnoble.com, talking us through some of the key markets we've seen and the key moves we've been seeing since indeed at the beginning of January.